At the moment, the data's holding up in the United States. The ADP report this morning was solid. Despite the move in risk assets, there just seems to be a takeaway in this market. I am not pricing out the Fed for 2018, and I don't care how high the VIX is or how low the S&P 500 is. I'm not willing to do that. Are you?
I think it's fair for now, in the sense that, as you mentioned, the underlying data still continues to print relatively strong. So that's something that for us is important to take note of here. I think it's also one of the reasons why you're not seeing the kind of volatility in FX markets or rates markets that you would expect either. Once that data starts to turn, if it turns in a material way, volatility in macro markets, not just equity markets, could also start to go higher.
For the Federal Reserve, though, looking at the situation at the moment, do you see a bite point in this market at all? Is there a bite point where the market trades low enough for you to say, actually, financial conditions have tightened enough for me to sit here and say that this matters for the Federal Reserve? And are we anywhere near that point right now?
Not yet, no, because it's too limited at the moment to equity markets, and specifically various sectors in that market that we're seeing maybe as having run ahead of themselves in terms of momentum. If you start to see this spread to, for example, credit markets, to FX markets, you start to see very wide ranges in treasuries. That's the kind of thing that might send a bigger warning signal than what we have now.
Lisa?
You know, I'm struggling with this narrative that longer-term bond yields are going to go higher. And I've been hearing a lot of convincing arguments that they could very well go lower. And even if the Fed does hike rates, what you're seeing is, frankly, growth expectations aren't going up that much. There still is $8 trillion of $50 trillion of bonds outstanding that have negative yields. Hard to see how that's going to be unwound that quickly. A lot of questions out there right now, especially with the trade discussions. We're not seeing a lot of volatility in bonds, frankly, because people are kind of paralyzed of all the uncertainties out there. So I think that there are a lot of questions, and it's unclear that rates are going to rise that much in the near term.
Not so long ago.